Mr. Miller, before we introduce the members of the committee here, do you have any announcements?
Yes, I have a great announcement. I would like to welcome the new mayor of Oldsmar, Mr. Dan Saraki, to PSTA. Congratulations.
Thank you very much, Brad. Thank you. Okay, let's go around the room now and introduce the other PSTA board members.
Good morning. My name is Richard Bennett, and I represent the beach communities, and I'm a commissioner in North Reddington Beach.
Dan Saraki, Mayor of the City of Oldsmar.
Jeff Gow, City Commissioner, representing the great city of Dunedin.
Josh Schulman, St. Petersburg.
Brad Miller, PSDA.
Okay, thank you all for the introductions. And now's the time for public comment. Are there any members of the public that wish to speak? Clarissa?
No public comments.
Okay, and no one online? Is there anyone, do we do online?
We do not do that.
We don't do online anymore. Okay. Thank you. Now for our action items. And the first will be to have a motion to approve the 18th of February meeting minutes.
I'll move that we approve the minutes of the February 18th meeting.
Okay, do we have a second?
Second.
Second. All in favor, say aye.
Aye.
Opposed? None? Motion passes. Okay, our next action item is the SEIU compensation adjustment recommendation. This is based on PSDA's direction at our last meeting. Brad, would you go ahead and introduce this item, please?
Yes, thank you. Good morning, everybody.
Good morning.
So I believe every member of the Finance Committee was at the board meeting on February 23rd, and so you saw this, but just as a refresher or reminder, the PSTA board unanimously voted at the meeting to direct staff to have discussions with the SEIU union about a possible, to see if we could mutually agree on a compensation package adjustment. And I'm very happy that we have done that. We've had some discussions, and James Bradford and Debbie Elias are going to present our recommended adjustment to the Finance Committee in just a second. The other item that the board directed staff to produce were some documents, some information about really the crux of what we heard from the union as their concerns, which was this issue regarding what happened last fall with our compensation study process. The board asked if we could kind of shed some light exactly on how that exactly went down. So Trish is up here. And so first, before Debbie and James come up to talk about the proposal, Trish is gonna walk through, there's a number of PDFs in your packet, and she's gonna walk through what we've got in there as information about what happened.
Good morning. Thank you. I'm glad to be here speaking with you all this morning about this topic. I'm Trish Collins, the Director of Human Resources here at PSTA. As Brad mentioned, James and Debbie will be speaking to a number of new developments and attachments that are as part of your packet. I'm going to speak to the PSTA compensation study, the timeline, the DASH report, and the compensation FY21 overview. All of your attachments that are labeled SEIU will be spoken to by Debbie and by James. So the PSTA compensation study final, that is the result of the compensation study that was conducted by McLeod and Associates during 2020 and 2021. The compensation study timeline, I'll walk through with you in just a few minutes. The compensation study DASH bus report, January 2022, that's an industry publication that lists the bus operator and fleet mechanic pay wages across the country. So that's a really comprehensive document that we use often here. And then finally, the PSTA compensation FY21 overview. This is what I'd like to start with us taking a look at now together, if you would open up that attachment. This is a comprehensive look at all PSTA employees and all wages and wage changes that happened during FY21. This is the first time we've produced a document like this that takes a look at all of these positions under the philosophy of achieving market competitiveness in our pay. There's quite a lot of information here, so I'd like to walk through it with you. What we're looking at here is every PSTA position, and we have several color-coded columns that represent pay changes that happened during 2021 and how those pay changes helped bring those positions closer to competitive market pay. Red means that the position is 95% or lower compared to market pay, so that's not where we want to be. Yellow, it means that the position's pay was between 95% and 100%. And green means that the position was paid at or above market pay. The first color-coded column is dated 9/30/2021. And that's where everyone stood before any pay adjustments were made. That's before any market study adjustments were made. That's before the contracts, the new contracts were put into place. And you will see that there is a lot of red in these columns. The next colored column, dated 9/30/2021, is after the market study adjustments were made for administrative employees. This was a catch-up adjustment to make up for years that had occurred since our last compensation study. Our approach with this catch-up adjustment was to bring all of our lower grade employees, our lower grade administrative employees, grades 9 and below, up to 100% of market pay, and to bring our higher grade administrative employees from grade 10 and up to 95% of market pay. And as you can see, that made a lot of improvement. We brought a lot of our employees closer to or at market pay at that point. The next column, dated 10/1/2021, is a flat 2% COLA adjustment for all of our administrative employees, and it shows the impact of our new contract wages for our bargaining unit SEIU employees. So on 10/1, every employee got a pay increase, and that column shows you again how we made even more progress towards bringing our employees to competitive market pay. And then the final colored column, and you have to go about 3 pages down to see the new, the fourth colored column, and this is 2022 SEIU adjustment proposal. This is what our Chief Operating Officer, James Bradford, and our Chief Financial Officer, Debbie Leas, will speak to in a minute. This is the proposed wage increase for our SEIU employees that we've developed over the last couple of weeks. And so this shows you what effect that would have on bringing our bargaining unit employees closer to the market pay, the competitive market pay that we're aiming for. So I'd like to switch gears for a moment. I realize that's a lot to digest. And I'd like to go to another attachment in your packet called the PSTA, or the Compensation Study Timeline. And this attachment kind of simplifies the changes that you're looking at in that larger spreadsheet and lays it out in a timeline with other related events. So February 24th of 2021, the board approved the budget and the market adjustments that were made for administrative employees. Then on August 3rd, our SCI union for frontline employees, they ratified their new contract. September 30th, We enacted the catch-up adjustments for administrative employees. Then October 1st, the 2% administrative COLA adjustments and all of the new SEIU contract pay increases went into effect. On October 15th, the SEIU supervisor contract was ratified. And then on January 1st, our administrative merit increases went into effect. And you can see a summary chart underneath that for our administrative employees, the difference that these adjustments made. So prior to our compensation study, only 64% of our administrative employees were paid competitively to market. After our catch-up adjustment, 85% of our administrative employees were paid competitively to market. And after the 10-1 COLA adjustment, we're now up to 89% of our administrative employees paid to market, which I think are great strides. And with these adjustments that we're recommending for SEIU, we're looking to bring that philosophy to the bargaining unit as well. Our bus operators and our fleet technicians fare very well compared to market even as it stands, but I believe, and we're recommending that we can even do better than that. So I'd like to bring Debbie Leas and James Bradford up to speak about our recommended next step and the proposed wage increases for our SEIU employees. Are there any questions before I do that? Yes.
Excuse me, are we eventually going to get to the point where you tell us what the recommendation is to the union employees for the future?
Yes, that's, Debbie and James will come and speak with that
And then I have a
immediately.
second question. I'm concerned about the comment that was made in the meeting about the Psta getting $60 million in COVID relief money. Is that a true statement?
I would prefer to have Debbie speak to that as our CFO.
Thank you, Trish.
Good morning, everyone.
morning.
Yes, we actually have coming in about $98 million. We had $40.4 million come in under the CARES Act, which has already been fully spent. We've got about another $15 million coming in under what's called CARISA, and then another $43 million coming in on ARP funding. Both CARISA and ARP funding is being used 100% for salaries, and it's going almost 100% to the union wage salaries, with a very small piece for the grant administration piece.
Were we aware of that this money was coming, or did it come before or after the union contract was signed?
We were aware that it was coming before it was signed. We did not all get all the grants in place, but we knew it was coming.
Okay.
Does that answer?
Yes, ma'am.
Okay.
Thank you. Any other questions on my piece? Otherwise, I'll turn it over to James and, oh, yes.
Thank you, Mr. Chair. The market study, that was completed in March. According to the market study, it says March 2021.
Yes, approximately, yes.
Do we know when we reviewed it internally as an organization?
Our leadership team was reviewing it from early stages, January through about April or May.
Okay, so the review of the market study was done prior to the ratification of the SEIU contract in August.
It was, yes.
Were any recommendations made to the adjustment? Right, so the adjustment took place on September 30th.
Mm-hmm.
When was that recommended? Like when was it decided that that adjustment would take place on September 30th? So I'm trying to get at did we decide before or after the SEIU contract was ratified to make the market adjustment rates and dollar amounts to administrative staff?
I think it was part of the presentation to the Psta board, that when the board adopted its compensation packages, the timeline of making the compensation adjustments at the end of the fiscal year.
No, and I understand that. I guess what I was trying to figure out is when internally it was decided what those adjustments would be.
Right, so as Trish said, the report was finalized by the consultant in March, and then we continued to have discussions, and then we went through, Trish and I, and again, this was like 100% on Zoom at the time. We went on a Zoom tour with all of the different department heads and managers of PSTA to get their input before revealing to employees the survey results and everything, and we went through a whole process of explaining how we did this fairly. We followed it, and then that went into, I believe, July, and it was pretty much ready to go lockdown about the end of July.
Okay.
And right around the same time, on a separate track,
Right.
that the labor negotiations were going on.
Okay. And this may be a question for James, but the different steps for operators and customer service and things like that, are those job titles consistent across agencies that were reviewed as part of the market study? It's hard to understand whether, Hart has, 5 or 6 steps when it comes to, bus operators.
Yeah, that's actually a very good question. The steps are not necessarily consistent from one agency to another. So what we're generally comparing to are starting pay and top pay. And those are the 2 points that we know we have in common with every other agency with a similar position.
Okay. and
For
so then
bargaining unit
So then
roles.
we kind of just work out the math in the middle based on, okay. Okay, I have other questions, but I think they're for other folks.
All right.
So thank you.
Well, with that, I'll
Thank you, Mr. Chair.
bring up James Bradford and Debbie Leas.
Good morning, Finance Committee members. If we can put the slides up, please. Ms. Cagliostro. So, hello to all the Finance Committee members, James Bradford, Chief Operating Officer, and good morning to all the men and women PSA employees who are watching this live stream right now, including our union leaders. This is a day of moving forward. This is a day of positivity, of really the culmination of the discussions and the positive and the good vibe meetings that we've had over the past couple of weeks as we propel ourselves forward, and that's what I intend to present to you all today. So I'm going to be going through a PowerPoint that you all should have at your places. In addition, there are 2 additional documents that you can follow along with me. So there is the PowerPoint if you have that, and then there should be excerpts of the pages of our current contract that shows our current pay rates, and then a separate sheet that shows the pay rates that we have discussed with our union leaders and our great men and women PSA employees who we've had meetings with as we try to propel forward. And it's just, I'm excited to just present it to you, and I'm excited for our bargaining employees as we try to move forward. So we can go ahead and go to the next slide, and I'll take you through the slides. Please stop me if I'm moving too fast on any of this. This is a quick summary of the last 30 days. A lot has transpired since I was last in this room with you in the last Finance Committee meeting. And leading up to the February 23rd board meeting, where we heard multiple SEIU reps and men and women advocate on their behalf of keeping up with fair and equitable wages, with rising costs of living and the inflation of gas and groceries and everything, saying, hey, listen, I think we can do better. And since then, I believe we can too, and I'm excited to kind of go through this. So our communications have been very positive. I know February 23rd seemed to be a dark cloud, but in this business, and I've been doing this a long time, and I've had a lot of challenges, you have to have a short-term memory, you have to sit down, have the discussion, and you have to figure out a way to move forward so everybody can work together, and that's what we've done. We've met with our SEIU leaders in person, but via Zoom. We actually held a webinar for the sake of transparency, so I had better than 60, 70 people or more of our own employees tuning in live to watch as I had a discussion with the union leaders about how we move forward, and it was recorded, so anyone else who wants to continue to watch those meetings can. So we met a few times, and we went back and forth on what is it that our SEIU union is looking for, and how do they believe they stack up against other agencies, including right here in Tampa Bay and all of Florida. Right away, our collective goal was, how do we do this? Are we going to reopen negotiations, which could take weeks or months, or do we want to have a discussion, kind of meet in the middle, have the union share with us, the SEIU union share with us the information that they got, some of the numbers that they're looking at, and then maybe agree to meet somewhere and kind of, bring this home much sooner. And that's what we've done. So we didn't reopen the contract, we just had a discussion and exchange of ideas. The union's goal was, one, to try to meet or exceed the pay rates of their counterparts right across the bay in HART, Hillsborough Area Regional Transit Authority. They want to remain tops in wages. So right now, HART is at the table negotiating wages. We kind of have an idea of the package they're looking at, and we wanted to exceed that. We wanted to do better at that than they are and keep them at tops, not only in the Tampa Bay, but in all of Florida. Our goal was to, and the union's goal as well, was to increase the starting rates. We see that it is very hard to retain people. It's very hard to attract new talent. It's the year of the Great Resignation. There's a lot of competitive wages. A lot of other businesses are raising their starting wages. We needed to do the same thing for bus operators, for our mechanics. And I believe, and what I'll show you is we've done that as well, to not only attract new talent, to recruit new talent, and to retain that talent so that they stay with us for years to come. It is very expensive to have to keep replacing turnover. Of course, our management goal, and PSA's goal, was long-term financial sustainability. We have to keep the doors open. We have to keep the wheels moving on our vehicles for years to come as well. The collective goal was to reestablish the communication and trust. So to move past February 23rd of having folks come in here and advocate and feel hurt and feel let down, don't want to do that again. We won't do that again. We'll make sure the communication, the transparency is there as we move forward. Next slide, please. So we gave it all we got. We threw the bank at them. Lest anybody listening to this think we held back, we did not. We came with our best foot forward right away. I believe the union saw that, which is why we are where we are now, just a couple of weeks later, and not still going to be talking about this in the summer months. We're able to boost the bus operator top rate higher than HART's, including whatever the future contract might be in Tampa, maintaining and making sure that our Psta employees stay not only competitive, but at the top of the bargaining food chain there when we compare ourselves to other transit agencies. We've boosted, and this is big, the starting operator pay from $16 to $18. I think makes us a standout. And we've boosted our starting technician pay. We were down there working in the conditions and all the elements and open and closed bays and everything to $20.50, which hopefully, and if Joe Cheney and Henry Lee Cassick are listening now, makes them happy, allows them to know that they're going to be able to recruit new talent to keep these buses and the new technology of these vehicles, hybrids, electrics, and everything else moving forward. And another big thing, and I know you all asked a question about progression. A lot of transit agencies across the nation have some type of step progression plan where you come in at one rate and then every 12 months or so you move up. For some it's 3 years, 36 months, some it's 48 months, 60 months, so on and so forth, 72 months I've seen in the region. We, as part of this new plan, will have condensed the time it takes a new person to reach the top steps to 4 years, 48 months. I haven't done that before at all. So now, not only are you going to come in at a higher rate, it's not going to take you that long to get to the top rate. And if you look over to the right, and I know it's hard to see, so I don't know if you have a closer up visual of that. Right now, with this new proposed rate, we're going to bring our bus operators to $27.60 right away with your approval, and with hopefully next week the board's approval, $27.60, which will represent a over better than 10% increase between now what will be in this current contract compared to what was in the last contract. The customer service representatives, same thing, big increase, going to bring their top rate to $22.50, which is almost a 9% increase in this current contract compared to the last one. And then our technician threes, our most advanced technicians, boosting them up to $29.90, almost $30 mark, putting them up there in the top tier of the other $30 technicians in the state of Florida. We can go ahead and go to the next slide. So again, we put our best foot forward, didn't hold back. The union was happy. We are happy. We're going to do this. And as you can see right now, with your blessing and approval today, and hopefully the board's next week, PSA bus operators will be the highest paid bus operators in the entire state of Florida. And we're trying to put together a package to make sure that they stay up tops for years to come. Of course, that's going to be with competitive bargaining. That's going to be with smart strategic financing and forecasting. Of course, getting together with Chief Leas's team to make sure that we're able to do this in the correct and the smart way. But right now, if you look at those leaders, where they were at number 5. Fort Lauderdale, Miami, West Palm Beach, we will be up at the top step, and that has made nearly 400 men and women very happy. In addition, year 2 and 3 to finish out their contract, staying up there at the top rung. Next slide, please. I'm going to stop it there. I will come back to you, but I'm going to pass over for this slide to Chief Leas.
The microphone was a little taller than I was there for a second. But thank you, James, for passing it over to me. And one of the things that when we started negotiations, our inflation rate was at about 1.9%. And as Commissioner Schulman has mentioned, it has gone up significantly. Matter of fact, at the end of February, we were looking at about a 7.9% inflation rate. One of the things for all of you, and I think all of you have been on the board for quite a while now, you know I'm very fiscally conservative. One of the things, though, that I find that is very important, though, to invest in is our people. I always say our people are our greatest assets. And even though we've got a lot of uncertainty in the world right now, the one thing I am very certain about is this is the right thing to do at the right time. We do have the availability of the COVID relief funds that we can use towards this, and it will also provide, as James has mentioned, we are looking at the wages not only at the top, from the bottom all the way up. That is going to help us with recruitment, it's going to help us with retention, and this will lead to savings both from the HR side and from the training side. But savings at this point in time is not as much my concern as being able to do the right thing. This is fiscally sustainable as we look forward over the contract, and I feel very confident we can work with this. The other thing I feel very confident about is in the past, in my dealings with this union, they have been excellent partners to work with when we have had issues. For example, at the beginning of COVID, we did not know what was going to happen financially. We stopped charging fares. We stopped doing a lot of things, and they worked with us on that. Matter of fact, back in the Great Recession, the union took a 1% pay increase, knowing it was not financially feasible. Should we run into unforeseen things as we move forward, I know they will be great partners again to help solve any potential future year issues that we may have or challenges. So with that, I'm going to turn it back to James.
Thank you, Chief Leas. Next slide, please. So, as we've seen, there's lessons learned here. We intend to move forward positively. February 23rd, bit of a rain cloud. Our great men and women came here to advocate for themselves, and rightfully so. Every right to do that. I'm glad they did. We're in Florida. We're used to rain clouds. They don't last very long. Sun comes out again, and we keep it going. And that's what we intend to do here. Future compensation studies will be conducted on all employees at the same time, not separately, so that there's not this idea of division. Oh, you know, the union's saying, oh, you're doing the admin separately and you're keeping things from us and you're not comparing the same agencies. No, all at the same time. Total transparency. They know what we know at all times. Planning, and not that any, you know, we're just going to do it better. That's all. Planning ahead, Psta will coordinate our bargaining calendar. So I have the supervisor contract ending in another 2 years. The frontline employees, which is bus operators, customer service reps, and all of our technicians end 2024. We're going to start negotiations around the time that we have any discussions about what we're doing with administrative wage increases. All that's going to happen around the same time. So when I go back to the table, we can openly discuss what information's out there, what PSA's done for other people, and we'll have that fair and equitable discussion. Next slide, please. And so with that, I'll stop it there, take any questions you all may have. But again, I'm excited. Thank you all for listening to me and the men and women who may be live streaming this. Again, positivity. I've heard from you all. I know there's been a buzz in the air because I've heard it. I live in that building over there. Folks are walking with a pep in their step. They're proud of their union leaders. So am I. We have a good relationship, and we want to move forward with that great relationship. So we're hoping that we will recommend approval to you of these adjustments. Again, hopefully you have those numbers at your packets. The union is agreeable to do this as a meeting of the minds, of the exchange of ideas to how we got to these numbers, thereby waiving bargaining, which they're agreeing to do, so that these salary wage increases can take effect much sooner, rather than waiting weeks and months and months and months. That's it. I'll leave it there and take any questions that you may have.
Have any questions from the dais?
Yes, this may be a question more for Debbie than it is for you, but what effect does this have on our purchasing of new buses?
It doesn't have any effect on the purchase of new buses. The 24 that I've got on order were 100% federally funded. I don't want to take any thunder away from Brad, but we just received a grant as it relates to getting another $18 million for electric buses, and it really doesn't have any effect on that. So we're excited to be moving forward on the electric side as well.
So you've talked about to us in the past about maybe deficit spending or problems in the future with finances. Do we feel like the money we got from the COVID funds and the federal government's funding, that's kind of under control now?
It is always going to be a challenge, as you know, in rising fuel prices, et cetera. You know, I can see there's going to be some challenges moving forward, but the COVID funds that we've always put towards like 80–90% of the COVID funds that were going towards salaries for the union in the first place. So this, I think, is not going to have a real big impact on that. The cost, which I didn't mention before, so I appreciate you bringing this up, over the next 3 years, this is going to cost about $11 million. Now, one of the things that I got excited about, especially yesterday and seeing in the grant that we have got for the electric buses, is I did have some money programmed as what I call a match when we do grants. So that will be going towards this as well. And it's the right thing to do, no doubt. Even if I have to skinny up somewhere else, it's the right thing to do.
Thank you.
Thank you, Mr. Chair. So before I jump into some questions, I did want to share that I've been advocating for an adjustment to bus operator and union member pay because of inflation since December, January, November of last year. So I believe that there was more that we could be doing, given that the actual circumstances in the world are different than what was going on in August and couldn't necessarily have been foreseen by the union leaders. So I wanted to preface that. I also wanted to say, please don't take hard questions as a dark cloud, as a way of trying to bring things down, but it is our job here to provide oversight and make sure that we're asking those questions. So our original goal of the market study was to bring administrative staff to a 95 to 100% of median study salary. Is that correct?
Yes.
I realize that's I'm going to be bouncing between operational areas here.
Yes, that's correct. With our catch-up adjustment, we aimed to bring our administrative employees to between 95 and 100% of market.
Okay, so, well, 95 to 100% of the midpoint of market, not the average, but the median.
Right, the median of the salary range is equivalent to market pay. So median and midpoint are really essentially the same.
Understood, I just want to make sure, because in the study, when I was reading it, it talked about not using average to get rid of overly compensated and overly undercompensated people, and really kind of focus on what's happening in other transit agencies. And so we had that number. Our goal was to get to 95 to 100% of that for our administrative staff, because they had had less salary adjustments along the way. They hadn't been stepped up and also guaranteed to have those inflation adjustments and other steps as opposed to the union members. So the first question that comes to mind then, given the fact that the union was here several weeks ago talking about how it was unfair that the administrative staff and other folks were getting bigger percentage raises than what they were getting, this new contract would have step 1 bus operators at 112%, step 2 at 121, step 3 at 130%. Not sure what's going on with step 4, why it's okay that they're at 90 or 89. And the same thing's true of, across the board. A lot of these folks are now at 110% of, I'm guessing, midpoint, although I don't know if that's, it says new to midpoint, so I don't know if that's the same exact study group. So along the same lines of the question that was brought up about fairness, and we've talked about fairness and equity, I would expect to see the administrative staff in here, next month saying, well, why did they get raises that were, the whole point was to bring us and work us towards equity, not take one group and surpass it. So that's where I struggle with this, is that, while I wanted and still want an adjustment, I'm not sure how I can look other employee groups in the eye and say this is fair and equitable.
Those are excellent questions. I'd like to take a couple of them sort of chunk.
However it's easiest to unpack.
You brought up a really good question about steps, and we spoke about not every agency using the same number of steps. The steps aren't the same duration in time. And so just to speak to, you're looking at our bus operators, step 1, 2, and 3, and then something strange happens at 4 where it goes down again. We compared our bargaining unit employees, for the purposes of putting this document together, to starting pay and top pay at other agencies. So the first half of the steps 1 through 3, newer employees, we compared those rates to starting pay. Step 4, 5, and 6, as you're getting more experience, we compared those rates to top pay. And so that's why you see a change in the difference between the percentage for step 3 and step 4, because we're comparing first the starting pay.
So we're just comparing at the ends,
Yeah, exactly.
not coming up with a benchmark.
Exactly, just for the purposes of this comparison.
Thank you for that clarification. That makes sense.
I think another important thing to consider is that every organization makes a pay philosophy based on its hiring and retention needs. Some organizations choose to lag the market. Psta chose to lag the market for many, many, many years. We're now making the decision to meet the market, to pay competitively to market wages. Some organizations make, think Google and Microsoft, they make the philosophical decision to lead the market and to pay higher than market rates in order to attract and retain people even more competitively than their peers. So for us, mostly, we are positioning ourselves to be competitive to market. But there are some very critical positions where we need to lead the market in order to attract and retain the number and the quality of employees that we need. You're probably aware, the rest of the committee may be aware, there is a national transit bus driver shortage. There's a national CDL holder shortage. It's even affecting the transit or the over-the-road trucking industry. So we believe that it's strategic and important to actually be more competitive with our bus operator rates in particular, because it's a very competitive world, even more so than for our other types of positions.
So I appreciate that, and that actually, I think, is a tremendously positive and clarifying statement, that there is a reason why, in this case of operators and in certain positions, to deviate from the other stated goal of bringing other people along. And so I appreciate that. I would actually, in front of the board, make that point more clear, because I think it is a salient point. Okay, and I think that somewhat answers some of the other questions. Although when we're talking about the steps, you went from base pay to top pay. Do we have any knowledge about how long it takes to get from base pay to top pay at other agencies? Is that information readily available?
It does vary from agency to agency. As we go out for our next market study with a vendor and really look at comprehensively all of this data, we'll do more to smooth that out and compare apples to apples.
Okay, yeah, because I think, so, I mean, the chart that you put together that talked about the different steps, and, I mean, that was incredibly helpful in trying to understand how all these pieces are coming together over time. But because the data is lopsided, you know, it's not as smoothed out as you just said, it can lead to a incorrect assumption or incorrect review. So I think smoothing that out as best we can with the data that's available would be helpful. When putting this together, outside necessarily the SIU contract, was there anything that came up that was surprising, either with administrative staff or anywhere else, that was like, well, okay, there's something here that we're seeing that now that we can visualize this, that may not have been apparent prior?
Yes, actually, some of the red areas among our bargaining unit positions, even at top pay, were surprising to us. So if you look towards service attendants and some of the facilities positions, those are still further away from market pay than we would like them to be. So that was a bit of a surprise.
Okay.
But you will also see that we, as we make these changes, are getting closer and closer. We're trying to make those improvements for everyone.
Okay. All right. I don't think I have any other questions. Thank you. Thank you, Mr. Chair.
Thank you, Mr. Shulman. Have we any more questions? I have a question, actually a comment for Mr. Bradford. And I'm totally on board with paying people when they start and to retain them because of, again, the cost invested in that individual in training, in time, in experience. And so the more we can save on that end of having people maybe stay 3 months, 6 months or something, then leave and keep them, it's a way added benefit. So again, I'm on board with that for all across the board. And then for Ms. Leas, Debbie, I want to go back to Mr. Bennett's question, where this is one-time funding that we're getting right now. And the cost is $11 million. So is that cost covering us for the next 3 years?
Yes, it is.
Okay. Okay, so then we're going to see what happens, I guess, beyond that.
The longer you go out, we do projections going out a number of years, and a lot of times we go out 10 years, 20 years.
Uh-huh.
But the further you go out, the less relevant it is. And so we know that we're very stable, and this is very good through the next 3 years of this
Okay.
contract.
Okay, that's all I have. Thank you. And
Mr. Chairman, I'd like to make a motion to approve the SEIU compensation adjustment recommendations by James Bradford, Debbie Leas, and Trish Collins.
okay, thank you. Mr. Mayor?
And I will second that motion.
Okay, we have a motion and a second. All in favor, say aye.
Aye.
Opposed? None. The motion passes unanimously. Thank you all for your hard work.
Thank
Great
you all
job,
very much.
guys.
Thank you.
Great job.
And you too, Mr. Miller. Thank you.
Thank you. Good questions. We'll make our presentation to the
Okay.
board better next week.
Next, we have our audit report. And our committee annually reviews and receives the annual PSTA audit. PSTA CFO Debbie Leas and Director of Accounting Julie Lupus are on deck. Let's go, Debbie.
All right, thank you. Thank you so much. I always get so excited when we're coming to the close on these things, and this year it's been a challenge. We've got some new staff on board. They came in right at fiscal year end, but I want to commend everybody, Julie Lupus, for the work she's done in orchestrating all of this, and the entire finance team, especially our new members, such as Shelley Chapko and Lisa Barco, who came over from Hart to PSTA. They came over to the bright side and have done just a yeoman's job in getting this together. And I'm extra excited because we have, again, no audit findings. And with that, I want to turn it over to Julie Lupus to introduce our Cherry Beckert group.
Thank you, Debbie. Good morning, everyone. I'm Julie Lupus, Director of Accounting. I'd like to take this opportunity to discuss how well the audit went this year. This is our second year with Cherry Beckert as our auditors, and I really feel like we've got this pandemic auditing down. It's much different than old-time auditing pre-pandemic, but their professionalism never wavered, and they have been awesome to work with for the last 2 years. A successful audit is completed by many, many people. Not everyone has something to do with every aspect of the audit, and not everyone's work is as directly involved with the audit, but every single person in the finance department, what they do every day touches what gets audited. And it's the work they do and the dedication to doing it right to the best of their abilities all the time that gets us to the results that we are at today. So a shout out seriously to the entire finance department, because they're the ones that make this happen. So with that, I'd like to introduce Lauren Strope, Audit Director for Cherry Beckert, to talk about PSTA's fiscal year 21 audit.
Good morning. Thank you so much to the Finance Committee members for having me here today to discuss the results of the September 30th, 2021 audit. Julie, if we can go to the next slide. My name is Lauren Strope, and I have served as the Audit Director for the last 2 years on the engagement. I did want to kind of cover some of the highlights with you today. If at any time you have questions, please don't hesitate to stop me. The financial statement, that draft that you have in front of you, is not mine as the auditors, and it's actually not even management's. It's you as the board or those charged with governance. So again, if you have any questions, do not hesitate to shout them out. We have completed our audit as we planned and communicated to you in the engagement letter. That's really important to note, because if we had any changes to that plan, generally it means that we encountered an issue such as a scope limitation or some sort of internal control problem, but we did not have any of that. So we were able to communicate the audit as planned, which is a great thing. We are prepared to render all of our opinions dated March 30th, which is the date that we'll have the board's approval to issue the financial statements. We actually follow several different audit standards in order to complete our audit of the PSTA. The first is generally accepted auditing standards, which requires us to perform our audit to provide reasonable assurance that the financial statements are free from any sort of material error, and that they're prepared in accordance with GAAP or generally accepted accounting principles. This year we do plan on issuing an unmodified opinion, which is the highest level of assurance that we as an independent auditor can provide to you. It's a clean opinion. It used to be called unqualified, and it's really the only kind of opinion that you would want. The second set of standards that we follow are the government auditing standards, which are required both because you are a government entity and because you receive single audit being federal and state dollars. This is also sometimes referred to as a yellow book report. This requires that we look at internal controls over financial reporting. We don't opine on internal controls, but if we become aware of any sort of material weakness or significant deficiency in internal controls as a result of our testing, we would be required to communicate that to you. We don't have any of that communication for you today. So again, a clean report and the only type of report that you'd want there. For the single audit report, we actually follow two different sets of standards. For the federal side, we follow the Uniform Grant Guidance. And on the state side, we follow Chapter 10.550 Rules of the Auditor General of the State of Florida in order to do that work. That work requires us to look at not only compliance with the different compliance requirements set forth by the OMB, but also to look at internal control over that compliance. We have a no comment letter this year, or unmodified opinion, which essentially means that we did not find any issue with compliance or an internal control over that compliance during our testing. Again, a clean opinion and the only type of opinion that you'd want. The state of Florida, Chapter 10.550 also requires us to issue a management letter as part of our reporting package. This changed a little bit from last year because you are a special district, and the state of Florida did require a little bit more disclosure about special districts in that letter, but it's still a clean letter. It's just a little bit longer than it was in the past, but still a clean letter and the only type of letter that you'd want as a result of the audit. The state of Florida also requires us to review PSTA's compliance with the state of Florida investment policies, and we are issuing an unmodified report, meaning that you are in compliance with those investment policies. We will aid in the data collection form and the auditor's part of that, and we will complete the NTD agreed upon procedures report after the issuance of the ACFR, or the annual comprehensive financial report. During our testing, there were no internal control matters to communicate to you. There were no past adjustments or audit adjustments. What an audit adjustment is after management provides us with the trial balances, we as auditors have to say, hey, you're going to need to make this entry in order to bring this in accordance with GAAP. That would be an audit adjustment. A past audit adjustment is the exact same thing, except management, for whatever reason, chooses not to make that entry. We would then be required to make you aware of that. We did not have any of those entries, and that's really good to know and nice because obviously we only do the audit at a certain point in time, but if we had to, as the auditor, come in and say you need to make all of these entries in order to bring the financial statements in line with GAAP, it makes you question a little bit more those quarterly reports and things that you're getting, but we did not have any of that. There were no changes in accounting policies this year. There were no new GASBs implemented. There will be a GASB next year related to leases that will have a significant impact on a lot of local governments, so we will be working with management on that. If we can flip to the next slide, Julie. This is kind of a highlight of some of the stuff that we look at when we look at internal controls of the financial statements. It's not to say that this is all we do in an audit, but this is a large chunk of it. I did want to mention that we do test internal controls in order to rely on them during the course of this audit. We do test controls over cash receipts, cash disbursements, and the processing of payroll. In order to do journal entry testing, we do feed the journal entry into a system called Active Data, which helps us to pull out riskier type entries, such as those that hit infrequently used accounts or just accounts that don't make sense based on the other side of the transaction. Nothing was found during the course of our testing. We also look at IT controls over the financial reporting system, things like backup and recovery, access and security, and the system development lifecycle. Julie, if we can go to the next slide. Again, these are some of the significant audit areas where we spend time. That is not to say that we don't do anything over the other areas, but this is where we focus a lot of our audit hours. So on the assets and revenue side, obviously cash and capital assets, and then any sort of revenues and receivables. We look at payables and expenses, anything related to payroll, specifically OPEB and pension, just because there's a lot of actuarial assumption that goes into that. We look at other areas as well, such as net position, ensuring that any sort of restriction is properly disclosed. We look at self-insurance, just because, again, that has a significant estimate in it as it relates to the actuarial assumptions. We look at inventory, subsequent events, commitments, estimates, and we do send out a legal letter to ensure that any sort of legal disclosure is properly made. If we can flip to the last slide, Julie. We did complete our single audit. We did actually audit 2 different programs. On the federal side, we audited the federal transit cluster. I did want to mention that that cluster does contain those CARES dollars that Julie was mentioning earlier. And on the state side, we did the public transit service development program. Again, in these testing, we were able to verify compliance with the state grant agreements and federal grant agreements and internal control over that compliance. Next slide, Julie. So in summary, clean opinions for everything. We did not have any audit adjustments. Internal controls seem sound. There is nothing to report and no deficiencies that I need to make you aware of. We had full cooperation with management. They are a pleasure to work with. Every question we have, they make sure we get an answer to it. Anytime we need documentation, they make sure that we get it and we get it quickly. So I really appreciate all of their help in completing this audit. And with that, I will turn it over to all of you for any questions. Julie, I think my information is on the very last slide. I did want to remind the board that I serve at your pleasure, not just now, not just when I'm doing the audit, but year round. So if there are ever any questions, please don't hesitate to reach out.
Thank you, Lauren. We have questions from the dais, all right? Commissioner Schulman, please.
Thank you, Mr. Chair. And you may have covered this. Was any of the audit done on-site or was it all done remotely?
It was all done remotely. So the only thing that we generally would need to be on site for is the inventory observation, which we were able to look at cycle counts this year, as opposed to the full-blown inventory observation. So that's how we're able to get comfort with it, just because of those sound cycle counts that are occurring.
Okay, so the cycle counts are an acceptable alternative to on-site inventory review?
Based on the size of the inventory in relation to PSTA's total assets, yes. If the inventory was a bigger size, or if it was inventory that was sold and then used in cost of goods sold or something of that nature, it would be a little bit different than what it is now. But because of the inventory at PSTA, yes, it is an acceptable method.
Okay, and this probably goes along the same lines, but part of it was a capital asset review, which includes things like our buses.
Yes.
So how did you go about determining that we are correct on the fleet that we have and what's being reported?
Of course. So we do look at the fixed asset roll forward and any sort of the additions. We take a sample of those and we get not only the invoices related to it, but also the receiving documents, ensuring that they were properly received and then properly put into capital assets and the depreciation was appropriately started.
Okay, so we're really looking at it mostly from the book entry side and making sure that it's documented properly. And while I don't think this is necessarily an issue, but we don't necessarily, no one's put eyes on a bus and said, yep, there it is, right?
Correct, but we do look at the titles to all the buses and ensure that they are in the PSTA's name and things like that. But no, we do not specifically observe certain buses. No, but we could definitely work that into our procedures next year if that's a concern of the board's.
It is
absolutely.
It is not necessarily a concern. It is just more of a query.
Okay.
At no point do I think we're missing anything. It was just I was interested in a COVID world. And pardon me, my wife was an auditor for a while, so I've many a story about other organizations around the world and country. So that's where those
absolutely.
are coming from. So
the AICPA did actually put out some guidance in the last 2 years, kind of involving specifically inventory and when you can do remote observations and things of that nature, specifically as it relates to the pandemic and everything that was going on. So a lot of the things that before the AICPA was saying, no, you can't do that, they are allowing now. They're actually looking at technology as well, like the iPhone glasses, and having people wear that and look around their warehouse and have auditors on the other side. And that's how they're doing some observations. I believe KPMG is kind of heading up, working with the AICPA on that. So there's a lot of change in the industry right now.
Thank you, and I appreciate what I also said last comment was just that I'm also pleased to see that there was title searches done to, especially for those capital assets that are registered, because that's another way to check. So that didn't occur to me, but I'm glad it occurs to our auditors. So thank you for that.
Absolutely, absolutely.
That's all I have, Mr. Chair.
Okay, thank you. Okay, I have a question, Lauren. On page 2 of the PowerPoint, the other deliverables.
Yes, sir.
Okay, how do we go about looking over the NTD agreed upon procedures? The National Transportation Database, our procedures with them, how do we audit those? We are auditing those, am I correct?
We do an agreed upon procedures, which essentially the NTD puts out procedures specifically that they want auditors of entities that have this particular report to do. So they say, you need to obtain this, you need to talk to these folks, you need to ensure that this ties to that document. So we perform those procedures step by step and then issue our report stating that those are the procedures that we performed.
Okay, and so that showed we're with no problem with that, right, with the NTD report?
We have not done that report for FY21. For FY20, there were no issues, though. There were no comments.
Thank you very much, that's all I had.
Of course.
Okay, gang, if we have no more questions, do we have a motion?
Mr. Chair, I move that we approve the FY21 audit report.
Second?
Okay, we have a motion from Commissioner Schulman, a second from Mayor-elect, or is it the mayor, are you already sworn in?
Last night.
Giddy up.
You felt the earth
So,
shake.
Mayor Saraki, and all in favor say aye.
Aye.
Opposed, none. Thank you for your hard work. Thank you, Lauren.
Thank you so much. Have a wonderful day.
Hello. Diane Randall, our Director of Risk Management, will outline two claim settlements for us to consider. Diane?
Good morning, Diane Randall, Director of Risk Management. This morning I'm here for action to recommend approval of David Simmons versus PSTA settlement of $40,000 and Brenda Millard versus PSTA settlement of $45,000. David Simmons' accident occurred on March 22nd, 2019, when he was driving a company vehicle that was stopped in traffic and was rear-ended by a PSTA bus. As a result of that accident, he sustained injuries to his neck, upper back, lower back, and left knee. 1 month prior to this incident, he had undergone an unrelated left knee surgery, and after this accident, he had to have another knee surgery. For Brenda Millard, her accident occurred on April 28th, 2017, when a PSTA bus ran a red light and her vehicle hit the side of the bus. Her injuries included neck, bilateral shoulders, right arm, wrist, upper, mid, and low back. She has had a surgical recommendation, however, she has not had surgery at this time. Both requested settlement approvals are within the established claim file reserves, and both cases were scheduled for trial. However, as we were able to reach these contingent agreements, the case and all issues will be resolved with these settlements. Therefore, I'm asking for recommendation to approve David Simmons versus PSTA at $40,000 and Brenda Millard versus PSTA at $45,000. Any questions?
Okay, thank you, Diane. Have we any questions? Okay, do we have a motion?
I'll make a motion that we approve the two settlements for $40,000 and $45,000.
Okay, we have a motion from Commissioner Bennett. A second, please.
Second.
Second from Commissioner Schulman. All in favor, say aye.
Aye.
Opposed? None? Thank you, Diane.
Thank you.
Okay, now we're back with Julie Lupus with the monthly financial report. We're moving right along. This is good.
Good morning again.
Well, good morning.
So for the month of January, we finished $300,000 unfavorable to budget due to the timing of the property tax revenue. Passenger fares were also $127,000 under budget due to the projections used for the budget this year and the unknowns involved at the time. On the expense side, we came in at $344,000 favorable to budget. Of this, $200,000 is attributed to purchase transportation being under budget, with the remaining savings coming from several different areas listed on the financials in front of you. Turning to the next page for the year-to-date figures, we finished with a surplus of $48.4 million and was $1.9 million favorable to budget. In the year-to-date, the property tax timing differences that we seem to be seeing on the monthly financials smooth out. Expense control is helping to carry the surplus here. Salaries are under budget, $537,000, and purchase transportation follows the monthly trends, being $960,000 under budget year to date. That's a really high-level kind of discussion of the financials. Does anyone have any questions?
Yes, just one question. For the month, the fringe benefit expense was $300,000 favorable to budget. Is that just a timing issue, or is that?
We had a lot of vacation items hit. January and February is when we have internal payouts that go on according to our vacation policies. So January and February's financials, and I know this is January, it really does depend on how spot on the accruals are at the end of the year related to how the budget comes in. So that there's more in the fringe benefits, but that seems at this time of year to be the biggest reason for some of the budget fluctuations. Just the estimates that are used in the vacation between the transportation folks and the admin folks and how that rolls out through January and February.
So that explains why the year-to-date is more
Yes.
normalized?
Yeah,
Okay. All right, thank you.
no problem.
That's all.
Okay, Julie, I have a question. On page 3 of our handout, I'm looking at expenses, and it's going down to purchase transportation access. Program expense for 2022 is 40.5% over FY 2021. And is there a reason for that? Is it added trips, or, do you know?
There are a lot of things that roll up into that actual variance. I know Bonnie was here, and Debbie might have a few extra things that I'm not going to say on that.
Okay.
But we dramatically changed how the vendors in purchase transportation in this fiscal year versus last fiscal year. And last fiscal year was still heavily involved in the pandemic versus this first fiscal year. So I think the new vendors have a lot to do with that, how the unknowns involved in their budgeting, the pandemic, and there are usage pieces in there that, Debbie, I believe you can speak a bit to.
I think, Julie, you covered that pretty well. The new vendors, of course, are costing us more money, but we also had the impact of less ridership during the pandemic, which is now going up, as you know, as things come back to a more normal state.
Okay,
So those
and
are
the
the two
new
main
vendors
factors.
are,
Excuse me?
okay, the new vendors are being First Transit then, correct?
Yes, First Transit.
And then any other vendors with that?
Lyft, Uber,
Lyft, Uber, okay,
Wheelchair
Wheelchair
Transport, United
Transport.
Taxi.
okay. And then Bay Area Metro too, are they included in that?
But Bay Area Metro and United Taxi is the same thing.
Okay,
Yeah.
oh, okay, I'm sorry.
Yeah.
It is, you're right. Thank you, guys. That's all I had. And did we get a motion? We don't need this information only. Here's the action.
Thank you.
Fine. Yeah, that's information only.
Yeah.
Brad, you're on with ridership performance.
So in your packet is the February monthly statistics. And as we've been discussing lately, our suggestion by Commissioner Schulman to kind of highlight things that are looking, highlight data on here that maybe is showing favorable or unfavorable trends. I know the question has come up about the large increase in complaints related to our Psta access program. And you can see on there in February, it says a 638% increase in complaints per 100,000 passenger trips on Psta access. Now, so we've really done a little dive into this. And Julie, I don't know if you were able to get the slide and are able to bring that up? You are, and then this is in your packet as well. What that statistic reminder is complaints per 100,000 passenger trips, so it's a fraction. number of complaints received divided by the number of riders. The riders this fiscal year, the denominator in that equation is only the first transit riders. When in the past, it's been 2 times the number of riders because Care Ride was the only game in town. It was all the Care Ride riders. Now, I think we're going to change this. But we were only calculating the traditional paratransit riders and not now more than half our riders are on these other modes, using Lyft or taxis or whatever. And so the denominator went down. The complaints have gone up. They're still relatively low, as I'm going to discuss in a second. That is, I think, part of the issue why the percentage growth is so high. It's just the way it's calculated. Now, grateful to some of our contract providers for providing this chart that you see up on the screen and that's in your packet. This is a historical look at complaints on PSTA access, or formerly known as DART, back to 2019. And you can see what happened there. When the pandemic hit, March 2020, complaints went way, way down. Complaints were down pretty much the entire pandemic. Also that we went free. So I'm not sure if our riders said, well, you pay for it. If it's free, I can't complain. I don't know what happened. The other thing that happened, you can see it spiked. It started to come up again in July of 2021. That is when the whole world changed. That's when Care Ride went away, and Care Ride was getting the complaints and tracking this. The numbers you see before July 2021 were collected by the vendor. After July 2021, now PSTA is tracking the complaints on all the different services. So maybe there's a different definition of what is a complaint that happened on July 21, but the complaints went back up, and that's also when we started charging fares. July of 21, and they as you can see, they've stayed kind of consistent. The red bars are the complaints regarding late or missed trips that we received. And then the blue is all the complaints. So the difference between the red and the blue is other kinds of complaints. I've been told anecdotally, what are those things that are happening? Well, we get lots of complaints about customers call and say their driver was not wearing a mask. And they were upset about that, or the driver drove improperly, or they don't, people that are not in wheelchairs sometimes have trouble getting up the steps, and so they are escorted. They use the wheelchair lift with an attendant holding them, even though they're standing up, and some customers don't like that. Those are the kinds of things that come up that's the blue delta there. So we're tracking this. We're tracking this carefully. You're going to hear about it. For those of you who are on the planning committee, or anyone who wants to stay, we're going to turn the planning committee into a roundtable at Commissioner Cox's suggestion to discuss what's going on with PSTA access, and especially with the launching of the new software, Spare. As you can see, we're getting complaints about missed trips or late trips, but it's fairly consistent with where it was pre-pandemic. And then remember that the monthly statistics compare this year to last year. And so like for February of 2022, the number of complaints we got, the blue column is like 25 total complaints. And February of 2021, we got two complaints. So that's a 1,200% increase, theoretically. I'm not sure if it's a good comparison, given the pandemic, the free fares, the vendor collecting it in a different way than we're collecting it now. So just some grains of salt I would say, when looking at that number. But it's an important thing to keep track of.
Thank you. Is that all you have? No, we have Mr. Josh,
Thank-
Commissioner Schulman, go ahead.
Thank you, Mr. Chair. Quick question about the complaints, numerator, denominator. Are we receiving complaints from all of the different vendors? Or are we just
Yeah.
receiving complaints from First Transit?
Well, again, starting on July 1st, now all the complaints are, all the phone calls and complaints come into PSDA. So yes, we're getting complaints. I mean, again, it's not enormous numbers, but we are tracking complaints from all the different companies.
But we're only using First Transit's rides as the denominator.
Yeah.
Okay, so that
So
is
we're gonna, that's not.
that is skewing that. So, this is why you need to write questions down when you think of them. So, hopefully I'll be here for the planning committee since I'm chair, and I will think of it then.
Yeah, exactly.
No other questions at this time, thanks.
Okay,
I just have a comment, Mr. Chair. Brad, I think this information is really good. If we could keep this going every month, like, or just so we have a printout like this, would be wonderful. Thank you, Brad.
By the way, I recall my question, if I may, sir.
Sure, go ahead.
So, do you have any thoughts as to why just the overall bus passenger trips are down from this year to last year?
I do, and we are working on next month at this committee, we will have a sort of a deep dive into the overall ridership, and actually we're pulling together some national statistics on transit ridership in general, impacts of the pandemic. Our benchmarking group has done a full, deep analysis of that. It's kind of, I think you'll find it interesting. I found it interesting. So
All right.
yeah,
Well, then I will be patient and wait until next month for that information. Thank you.
Yeah.
And really, truly, no other questions.
All right, we have no more business before this committee. This is adjourned.
I just want to share with you guys real quick. I was in DC last weekend. It was a trip planned 2 years ago, and I took the subway, the metro.
Stand back, doors closing.
Unbelievable. I really enjoyed that. It was a great transportation. I mean, you went under that freaking city. I went everywhere. It was incredible.
That's what a new mayor should do.
I haven't been there since I was 8.